This is the week 3 in my progress and journey of getting funded 100k in total capital before December. First, let me brief to you the ups and down challenge of previous week. I started the week 1 with many confidence, motivation that I even bragged of making 4% before the weekend. And when I purchase a 5k account, I will pass it. My next week plan and target will be being up 4% aggressively. Forex happened as I went 2% low. But as a fast learner, I learned my lessons and came to week 2 with lessons from week 1. The week 2, I traded with less pressure, zero overconfidence, and ended the week with 1% up. You can verify this on the previous video. It's one thing to learn a lesson and it's another thing to implement the lessons. And yeah, did I learn anything from week 2? Of course I did. And my confidence in making this happen is still 100% intact. Though I know I'm still very far from my target, but trust me, I'm getting there. Welcome to the week 3 of this challenge. Today is Sunday and the time of the week that I do a top-down analysis on any pair that I'm going to be trading against the coming week. So last week, we were supposed to end last week in $117 profit, but because of this JPY trade that ran in profit and later ended in loss, we ended in $99 profit, but still, no problem, profit is profit. So this week, I put it on myself again that we are going to end it in profit. For those of you that are motivated by what I do, I really want to tell you guys that this journey is not going to be easy, but believe me, it's achievable. So right now, I'm just going to be going over to the chart. I will show you guys. I will do a top-down analysis on all the pairs I'm going to be trading, and I also do some fundamental analysis against this coming week to know what last week looked like and what to expect anticipating this week. Because yeah, at the end, it's not to predict the market next move, because you can never predict the market's next move, but rather we just want to follow the market on anything it will be doing next week. One big thing Forex will teach you is that if you don't learn how to take risks, you remain in one place. If you don't allow your curiosity make you push boundaries, you keep in one place. The truth is that playing safe, yeah, will keep you alive, but honestly, it won't take you anywhere and it won't expand you. So let's just go and do a top-down analysis and yeah, get back to risking next week. The first trade we are going to be analyzing is Euro USD on the 1 hour time frame. As you can see, I've already done my analysis on Euro USD, but I'm just going to explain to you guys how I came in conclusion with this analysis. You understand? So starting from the top down analysis, starting from the weekly time frame. On the weekly time frame, before we start any other thing, let's read the previous week price action on this weekly time frame before we start any other thing here. Starting from this red candle, as you can see, sellers tempted to push this market lower several times, but buyers keep buying it up. And last week we had this massive buying on this pair. This massive buy, though it didn't close with a very strong body candle, but the message is clear. Buyers are interested in this market, and this big move to the upside also tapped into a weekly double top liquidity right here. Now the logic of double top is that when we have double tops like this on any time frame, the logic is that markets always come in future to clear it. So in future, we might see a market that break out of this liquidity and tap into this weekly supply zone. So back on what we are doing. So right now, I'm just going to be marking the highs and lows of last week and previous week. I'm going to be changing the color to pink. I'm going to be marking the high of last week, the low of last week as well, also the low of previous week here. And the reason why I mark out highs and lows of previous week is very simple. Listen, if this market is going to be bullish, it has to keep printing higher highs. In other words, it has to break this high here to continue its bullish story. And if it's going to be bearish, the first sign it will show us is that it will break this low here. It first of all take out this low before starting trading bearish. And if this low is being taken out and the trend continues, then definitely market will be going for this next low here, and during that time period we might see some opportunities to trade market down to this level. So that's the reason why I mark out the highs and low on the weekly time frame. Now on the daily time frame, what I basically do on the daily time frame is mostly just to check the trend and where the next move in the market could possibly be. Now let me explain something to you guys. See, if this market is going to be bullish, it only has to do two things. Either it pulls back into a meaningful demand zone before it starts it gain new momentum to start buying again, or it break the previous week high and continue the trend, then we start looking for buys from there. Now after we had this big run on the daily time frame, this big run that took out the high, this breakout that broke this structure right here. After we had that big run, market left us with a demand zone right here. And remember, this market is on an uptrend, and when market is on an uptrend, you only want to buy from demand zones. Now that market has tapped into this demand zone, now what we'll be looking for to buy this market is if we see a shift in structure again to the upper side like this. Now for that, I'm going to be marking out the highs of last week, the highs of the last day of last week and the high of the previous day before the last Friday, that is Thursday, like this. And I'm also going to be changing the color to blue. Let me go down on the 4-hour time frame. On this 4-hour time frame, before I continue breaking down this analysis, I'll refine this daily demand zone to this 4-hour demand zone. So now on this 4-hour time frame, the idea is quite simple. If this market is going to be bullish, then we want to see a shift in structure from this place. If this market takes out this place, then we'll be looking to buy, and our first target would be the Thursday's high, the Thursday's highest point. Actually, let me go down to the 1-hour time frame so you see it clearly. On this 1-hour time frame, what I'll be waiting for market to do for me before I start buying is if I see a shift of structure that takes out the Friday's high. This is this place. And if this market takes it high and gives our kind of entry, then I'll be looking to buy, and my take profit will be Thursday's high. You understand? Because yeah, this place is the low, is the swing low of this market. And read the structure with me. You see, market, we came here, we formed the low in this market, came here, we formed the high, we came here, we formed this low, and again we formed this high that took out this high, validating this low as a swing low, as a swing low. Now after we had that spike that took out this high, market continued its downtrend as we had another new low here printed here, we had another new low here, we had a high low, had a low high, a low low, and a low high. So if this market is to be bullish, it has to take out this high here and shift the structure from bearish to bullish again before we start buying. But if that doesn't happen, if market just if fundamentals next week just want to take this market bearish, we already know we don't have to run around the things. We already know we have to start selling. That is, if this market takes out this low here, then we'll be looking to sell down into previous week low. So that's how basic this thing is. I don't know if I explained it in a way you understood. Now the next play I've already analyzed here is gold. I actually had this analysis on gold that played out well, but didn't just give us didn't just give me my kind of entry. Now I'm not going to be stressing myself to go down to the weekly time frame to explain things. Already you know this pink lines are from the weekly time frame, and you already know the theory of this thing. If market is able to take this high, then we'll continue buying, and if it clears this low down, we'll continue selling. Now this is it on the daily time frame. Let me just start from the daily time frame. Now on this daily time frame on gold, as you can see, after market had this daily big run that took out this high here, it's left us with some kind of demand zone on the daily time frame, suggesting that if this market has to be bullish, it either pulls back into this demand zone to get new momentum to fly high, or just breaks the high. And in this case, it's pulled back into demand zone. And right now, the reason why I'm planning to buy is that market has also shifted structure. Still on this daily time frame, you see, after market tapped into this demand zone with this red candle, the next day we had this bullish engulfing candle that engulfed this particular candle here, and it also took out this the Thursday's high. And remember that this market just put into a daily demand zone, so break above the Thursday's high, all we have one thing to tell us that this market have shifted structure. You understand? Now moving down to the 4-hour time frame, let me see. On this 4-hour time frame, you can see clearly that this market has actually shifted structure after breaking the swing high here, this swing high here. Now let me explain this structure. Let me read this structure the way you understand. This market came here, had a low, came here, formed a high, came here, formed a lower low. After this low, we had this sweep that cleared this high and validating the swing low of this place. So after we had that sweep, we had a new swing, we had another swing low right here, another lower low. After that lower low, we had a lower high and another lower low. So after we had this lower low, the next thing we saw was markets taking out this previous swing low, validating a structure shift in market. So the plan is quite simple. If
gold is able to pull back here, then we'll be looking to buy. Our target will be previous week highest points. So I hope that explains this gold trade. For the sake of me not wanting this video to be long, I won't be going through the remaining 3 pairs that I've already analyzed. If there's any pair you would like to see me analyze the coming week, then leave it in the comment section. Today is Monday. I did my normal schedule and on my way to work, I caught this trade on USD. This trade is a frustrating, unforgettable trade for me this week, and you get to find out why. So when I got this trade, it was going very well, and my day was also going well. It was a rainy day. Everything was going smoothly until this trade that was running $80 profit closed in $26 loss. Market didn't pull back. What happened is this trade was supposed to close at $175, and when I checked it at 8 p.m. it was running at $80 profit. So I said I'll sleep on it. So around 11 p.m. when I was done eating and playing my normal game, I came back to check, only to find out that this trade closed in $26 lost. Why? Spread. The spread was so wide that it closed my trade at $26 loss instead of $20 loss. I got frustrated, devastated. A trade that I saw a few hours ago running in profit. They got me frustrated. In order to avoid any drama, I delete the account. Yes, I delete the trading account from my M. Because the more I saw it, the more angry I became. I know that the week is just starting, so markets will provide us opportunities, but for the meantime, my mental stability is very important to me. So what I did, I deleted the account. I had to keep it professional. I started trading with the second account. For those who are not in the week 1 of this challenge, I said I was going to be purchasing two accounts for each phase of this challenge. In case if one account fails, we have an alternative, or if things like this happen, we do have something else to be doing. Now this second account, I took this same USD trade on this second account, but I closed this one at 1:3 plus, at around $75 profit, as you can see here. The next day, market gave me a new opportunity on this USD and of course I took this trade. A 1:4 plus trade. It was running smoothly and it was getting late. Me haven't learned my lessons the hard way. I closed the trade immediately 8 p.m. I closed it. It was still running at 1:2 plus around $46. I closed it ASAP. You see why it's always good to stay off the market when you are not mentally stable, because if I allowed the Monday experience to be the judge of every trade I take, I might have not even seen a clear mind to trade all those things. I wouldn't have been trading with clear mind. Now back on that same account that I deleted, on Wednesday I just let bygone to be bygone, forgive myself. Go back to the chart, saw some nice trade on gold, and yes, this account, I closed this other account at $40 plus profit this week, and like this I'm done for the week. Honestly, I think I'm done for the week. Like, I'm no longer trading again for the week. So the lessons for this week are clear and clean. It's just left for you to decode, and you just put it in the way you understand. See you guys on the next episode.